Now, coming back to some conversations here at home and its earnings that we're tracking. So as promised, let's straight away look at Senco Gold now. The company reported a muted set of numbers for the second quarter, and growth numbers were a lot lower compared to the rest of the industry as well. To talk about this, we have Suvankar Sen, MD and CEO at Senco Gold. Suvankar, thank you very much for joining in. So your top-line growth is, in low single digits. I mean, just 2.5% top-line growth. And I understand in the call you've said there was flooding and there was Shraddh, but all the other jewelers also had similar issues to face with. Yet Titan grew 25%, Kalyan grew 30%. So we're just trying to understand what were the company-specific issues that pulled down this quarter.
So, if you look at the numbers a little more deeper, the standalone numbers, we had a 6.5% growth. In the console, we had about a 2% growth. But a lot of our customers actually postponed their buying, waiting for the festive season. So if we look at the YTD numbers as we ended October, we had a best ever October month with 1,700 crore sales compared to 1,100 crore sales in the previous year's October, which if we look at it now, we are at about a 25% growth year on year. So it's just that the particular Q2 with the gold prices being in an upward trend, consumers were in a wait and watch and all the weather and all the other things that were there. But ultimately, customers had to, give their advances and do their billing and booking in the month of October. So nothing much to worry about. As we look at it, our overall year's growth of 20% or so is very much in line. And as on date, we are at above 20% growth year on year. So it's just that the particular quarter, if you look at the numbers, especially with the last year's quarter, last year's same quarter, we had the duty cut, which had a good impact on the sales.
Suvankar, sorry, just to come in, you said 1,700 in October versus 1,100. That is like some 55% growth. And
Yes.
and then you said you're tracking 25% growth. So that is October till date. A Q3 till date growth is 25%, is it?
Correct. Q3
So November has come off sharply. I mean, October, of course, there was a fair bit of pent up, etc.
Yes, exactly. So that is the thing. So therefore, we should not get little worried, at all about the Q2 growth number.
But if you've grown 25% so far in the year, then wouldn't you expect to end the year also at 25% growth? Because I think you're still guiding for 18 to 20%.
So as we go closer to the end of the year, our guidance will become much more accurate. But seeing today, we can say that there is a higher probability of getting a 20% growth rather than 18% growth. So we should continue to remain positive with the wedding season very much in, and we can see the interest amongst the consumers there. So a 20% growth looks much more, sure, considering what we see today.
So, Suvankar, on the wedding season, I mean, festive is over now, it's all about the wedding season. The high price of gold, is that at all being a deterrent? I mean, if you look at wedding season this year, your expectations versus last year, will there be a blip just because of the way gold prices have moved?
See, in terms of value, I see that consumers have their budgets. They will continue to buy what is within their budget. If we look at the average ticket size of the consumers compared to last year, it has grown by 20-25%. So consumers are pushing and trying their level best, either using, their income or old gold that is there. That has also become an important tool to ensure that consumers can continue to buy. However, in terms of volumes, we are seeing that there has been a dip in volumes. Consumers are being able to not buy that much quantity of gold. YTD, we are looking at a volume degrowth of 12 to 15%. So, yes, people are looking at jewelry, which is lighter weight within their budgets. Sure. But overall, 20% is what we see the ticket sizes have gone up.
Okay, and a quick word on the margin as well. At the end of the second quarter, I mean, Q2, you're at about 7% margin. Just tell us what's the outlook on margins for the second half and the full year, and what role does the gold price play in that margin, and how much of your inventory is hedged, unhedged? Because I mean, just the markup valuation on this gold, that would also give you gains. So just explain the margin trajectory to us for the rest of the year.
So at the sales, if we look at the hedging in terms of sales, we are almost 90 to 100% hedged. So, the stable margin that we always say that is there in the business is in the range of 6.9 to 7.4%. So that's a kind of a stable margin. And if you look at the overall year's margin numbers, I think we should be doing anywhere between 7.1 to 7.4%. So that should be the EBITDA margin we should be looking at as we will be, ending the year. And the impact of gold prices because of 90 to 100% hedge on the sell side. And if you look at the inventory level hedge, then it is on the average of about 65 to 70%. So that's how it is. We are very confident the sales of diamond jewelry. Q2 has seen a little bit of a dip, but with Q3 and Q4, the wedding season, the Valentine's Day, and all the other seasons that are there, we will see a growth in diamond jewelry, which will compensate for any kind of pressure in terms of gold price discounting or anything else. So we are confident that a 7.2 to 7.4% EBITDA margin should be there by the end of the year.
Okay. All right, Suvankar, we will leave it on that note for now. Thank you very much for joining in and explaining some of these trends that were at play in Q2. That's Senco Gold.